Good morning, everybody. Happy Mother's Day to all of the traders' wives and whatnot around the world. 5/11/2014, we have a monthly chart on the Dow where the Dow started its uptrend in 1982. That's when that last bull started, and it went clear to what? Year 2000. That was 18 years. And then we had, in between those years, in 1987, the Dow had come straight down in a big crash. Well, this particular leg that we have from '09 to current to 14 is much wider, much more of a higher bull run than when we were back over here in 1996, 97, 98, all the way up to here, and we crashed. I'm going to say one thing for sure. The easy money has been made. The 2013 period, that whole year, nobody could make any sense out of it. Why? We all know why. High frequency algorithms have taken these markets and prices to absurdity levels that are not going to be sustainable. And then once again, we already have evidence in some of the high flyers in the NASDAQ, which we'll get to next, that have come down well over $100 off of their highs, just as we said. And we are also seeing here on this big bull run that started here on 5 years is that this is just a monthly chart, but we did make another high right up here. But it wasn't to, and this was on the Dow. Once again, this is May, and we can clearly see that every dip was bought from that big down move that we had in January. And then from that point on, we've come up. But you can see that the commitment here on a monthly level, this was your big commitment here, but your sell down month in January is greater than what that February move was. And we're also going to show you another thing. Here on the daily chart, we can see as far as what the Dow is doing here is this is a daily, so it's easy to see that we had put in bottoms, and each one of these low areas at support level we run right up. And this is a reversal daily, and it's a daily chart, and we're right up here at the wall. We made a high right here. This trend line that goes diagonal, that was your high. Every single time that we've tested this on the Dow, we have not been able to have a higher volume move to go through there to go higher. Now, we all know that the Dow has 30 stocks, that's it. And that this particular daily chart is immediately when we came down in here where this red bar is, they got it suited right back up, 50-day, 40-day, 10-day rising, major wall of resistance coming up. We're getting ready to have a seasonality change in June. And the first part of May is at 16,500 here. They popped in. Down here is the total movement in a very short time is there is that high. And you got to sell. Okay? And then you got to dip at 16.5. What we're calling for and what we said a week ago is that there is going to be, during this summer period, a 10% correction. A lot of people don't believe that we're going to get that, but we are. And that the upside is limited. And that the sellers have been moving back in, and we are going to use some bear funds to trade that Dow when it has that reversal. So when we get back to the previous months here of the calendar year, we can clearly see here, it's very evident here that this particular sell block of this monthly move is greater in value mathematically than here. We did not come roaring back. Yes, your lows are higher, but the body of the monthly price action does not look like this here. So there's a lot of indecision going on in the Dow, and we are going to have that major correction. And this is what that monthly looks like. They've started out the month of May right here is what I'm going to say is that those lows that we're getting on low volume, they're very minute, meaning that they're not totally just breaking out like we would see last year and in other various bull runs. So that's the top of the Dow, and that's very low volume here that has come in, and you do not have a huge May. We only first week. So basically that's how the monthly is. We're going to gauge it with the daily, and we're also going to gauge it with the following. By looking at it on a weekly level, you can clearly see here where these tops are resistance. They cannot blow through it. However, going into the second week of May here, we have a 10-week and a 20-week that is rising. And this is where we had that big sell-off. You can see it here. It popped off that 50-week. And now the 10-week and the 20-week are rising on lower volume. And what we're going to be looking at, and I've said it clearly, a blow-off top would mean that one of these days that are coming, starting tomorrow on Monday, or whatever day it's going to be, we can get a blow-off top, which at that point in time would be that major reversal that we're looking for, and it starts that way. So a gap up in the Dow or any of these other components would be met with big sellers, and that would be the end of the high for this time period. Or better yet, how about if I tell you that that high would get put in there, but we may not see it for several months. So that's the conclusion on the Dow, and the bear funds that go with it are tradable because, once again, they're at their very lowest prices on the Dow and how to play the Dow.